Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and today we're scalping some ticks right after the U.S. Open. We had the PCE Price Index released earlier today, and that was really a sort of an interesting event. Came in line with expectations. We're going to briefly recap the numbers. They don't really matter. They haven't done much to the market yet today. The NASDAQ's bounced about 1% on the early open. We've got crude oil making a bit of a move. Let's get right out to price action. You can see this is a 1-minute WTI crude oil chart. This is crude oil futures, and this is a great example of price behavior around a key level. Now, we're off about 1% in crude oil, but it's not trending. It really isn't trending. I'll pull a 30-minute chart here in just a second, but what you can see here is that 72 level. That's yesterday's low right there, 72.02. You can see right there in that orange line. That's yesterday's low, and you've also got the sort of the convergence there of 72 as being a key level. So we're seeing some compression. The market's either basing out here at 72, or it's sort of gearing up to make another leg lower. Now, I've been watching crude oil a long time, about more than a decade. And I can tell you that this type of formation is absolutely fascinating, because if you look at a 30-minute chart, this fakes a lot of retail traders out into believing this is a trend day. It's not necessarily a trend day. And you've got a great big B period sweep. There's A period, 9 a.m. Eastern, 9:30 a.m. Eastern, bang, bang. Okay, you get the big sell-off here. Okay, that's great. But what do we do now? Do we either break lower from 72, or do we rotate back up into this range? Right now is where the rubber hits the road. If 72 doesn't hold, then we could see a trend day down, and we could see definitely a bigger sell-off here in WTI crude oil futures. So right now, down about 1%. I'm watching price behavior. I'm looking for formations, chart patterns, really anything that gives me an idea of what's going on. And we're not getting it on a 5-minute. The 1-minute, you can see we got an immediate hammer. Right there, there's a hammer formation, but it didn't really hold. It didn't prove to be a reversal indicator. We're just sort of consolidating right in this zone. So if I was looking at this trading formation, I'd say, starting to look a little bit bearish. But this 72 area, 72 to 71, 75, is going to tell the tale. Earlier today, we bought some 26s right up here and sort of got fortunate, got a nice 5-point fill, but that was definitely a scalp before we really broke out, and now we're starting to break. The real question is, what happens at this war that we're having right now at 72? And, if you're a trader, we put out a key level video. Always know your key levels. This is why it's important. There's a lot of traders right now in WTI that are holding shorts that believe the big sell-off's going to continue. I'm not necessarily one of those. I see more rotation, but we definitely could press lower. Remember, the markets can remain irrational longer than you can remain solvent. So even if you're buying 72s with the best of intentions, we could still wash out to 71.50 or 71 and a quarter. It's all possible. Starting to see that rounded bottom happen on the 1-minute though. 72. There's bidders there. It's a fight. So always remember, there's a lot that goes into trading. It's not just technicals. Don't forget your key levels. Understand how assets are priced. Understand what brings participation to the market. 1-minute chart, great example. Look at my volume bars, my volume indicators. Volume was relatively low. We got filled up on this trade right here. Volume died down. We got paid. Volume sort of died down a little bit. We crept lower, lower, lower. What happens at 72? The volumes creep higher. That's not a coincidence. Nobody just magically said, let's just start trading right now. No, the number dictates the volume. The number dictates the action. So right now we go to 72. We're having a hell of a fight. We're trying to decide who's going to win, the buyers or the sellers. And, as a scalper, it doesn't get any better than that. All we need is a little bit of friction. We reach in, we take the money out. We let the smarter folks worry about market direction and how far down it'll go, or how far up it'll go from here. We're in, we're out, we're making money. So that's what scalping's all about. Today we're going to scalp. Emmanuel, good to see you. Good afternoon, good evening, good morning, wherever you may be. It's morning where I'm at. Good to see everybody back in the room. Bobby Bob, always a pleasure. Bobby Bob. Ivy, hi Shane. Glad I could join your early stream. Absolutely. We like to go early on a Friday, and the reason why is most of the time later on the day, everybody's already kicked off for the weekend. Should we buy crude? You could buy crude right now, Emmanuel. You could buy it right now. Stop yourself out underneath this. I wouldn't do it. I think it's high risk. I want to see what happens at 72. The jury's not in yet. But right here, if we go back to a 30-minute chart, what do you have? You got a little bit of rotation, some compression. This could still turn into a trend day down. So I don't particularly believe that it's a high buy right now. As far as what we were doing earlier, I'll just show you my trade real quick. I thought I was going to be able to do this live for you, but really didn't get an opportunity to. It went too fast. I was in the market all of about a minute. But right there's my moving average. There's what is that? That's my weekly moving average. 13-period EMA is one of my favorites, 72.22. I was buying 26s, looking for some compression right around that 72.25, and we got it. And so I'm a happy man early in the day. I'm sticking around. I want one more trade. And if I can get one more winning trade today, we're going to write it off as sort of a learning experience this week. A whole lot of nothing. A lot of big swings in my account, but not really any money to speak of. Challenging week to trade, guys. Challenging week. All right, let's get on to it. If you guys want to trade crude oil or really anything else, head on over to Switch. They'll get you up and running in no time. Today we had a key event out there, and it was going to be our core CPE and CPE or PCE Price Index. Excuse me, I always get those mixed up. You can see right here. Here's our economic calendar on how to trade, and let's just cursor down and see if we can find it. It should be right in here, and there it is. Core personal consumption expenditures. There's no real sense of looking at the numbers. They don't mean anything. They really don't. Personal income ticked a little bit higher. I've seen some headlines based on that. Personal income's up. All right, that's fantastic. Right here, core personal consumption expenditures. That's inflation. That's what we're after. Came in at 0.2%. Estimated was 0.2, previously 0.1. So we expected it to tick higher, and it did. Core, so, inflation's still a problem. It's not going down. PCE Price Index 0.3%, and that was as we estimated, 0.3, previous 0.1. So we ticked higher, or that's expenditures, excuse me, but we ticked higher than the previous release, but we expected to. So all in all, it's not a good set of numbers. I mean, you can say whatever you want to say about it, and the media already has, but your inflation's becoming entrenched. I don't really know how we get away from it other than raise interest rates. This is a good look at the gold market right here. This is sort of how we're going to be scalping today. Gold is been creeping higher, but it's relatively flat here over the last 12 hours or so. We're up about 0.7%, so we are beginning to trend a little bit to the top side. Right now is a pretty good time if you're going to scalp gold on short time frames. It's a pretty good time to be in the market. And the reason why is we're in the heart of that London-New York overlap right now, and it's a real active period. So there's volume in the market. We have a chance potentially to get in on a decent-sized retracement, something that really makes it worth our while. So right now, this right here really started before our trading session, about 5:20 a.m. my time, about 7:20 Eastern. I typically don't start trading gold in the morning until a minimum of about 6 a.m. or 8 a.m. Eastern. I'll start about 90 minutes before the Wall Street opening bell, and we can start seeing some nice action, some good volatility, some nice tight price action, nice tight markets, tight spreads and things, good enough volume to begin trading gold at about 8 a.m. Eastern. That's my own personal guidelines. We put out a video on the ICT kill zones today over on our How to Trade Calm YouTube channel. Go over there and check it out. See if you can glean anything. It's about a 4-minute crash course. Be sure that you check that one out. We put a lot of time into building that one. It shows you how to build the ICT kill zones, and that can give you a sort of a broader idea of when you should be trading maybe a strategy such as this. So I'm looking at gold right now, 5-minute chart. You can see that we are firmly in overbought territory, so we're on a sell. So what does all that mean? We're going to run through it right now. This is the sort of the tool that we're going to use. We're going to use the 9 EMA today with the RSI confirmation, and we're going to be looking at the gold market 5-minute chart. Definitely got to do that. The dollar CAD, we've got to look at the dollar CAD. Big announcements yesterday out of the White House. We're talking 25% tariffs on Canada and Mexico. Those are huge tariffs, and it shook the markets up in a big way. If we have time, I'll go back and show you exactly when that news dropped yesterday. It shocked me. I was already kicked off for the day. Had a nice day yesterday. Went to the gym, and while I was in the gym, I started getting news alerts, and I went, holy cow, what happened? And the markets went absolutely berserk at about 3:30 p.m. Eastern. So good stuff. Let me see. Crude is not in my chat. What's the symbol, please? Yeah, I mean the symbol for crude oil is CL. So CL futures, or you can be looking at WTI or U.S. oil. One of those three. I'll give you a good idea of what crude oil or where to find it. In any case, this is what we're looking at today. So remember, no donation Friday. What does that mean? It means that if you're having a winning week, you put 50% of your wins into your pocket. Why do you do that? Because we want to preserve momentum. We want to preserve momentum. This game is a marathon. It's not a sprint. You can't just get in there and make a fortune in a few days, unless you're on YouTube and then they all make $50,000 a day and they try to convince you all that stuff. We don't do that here. I'm giving you a good, we're going to go out actually over my performance for this week. We're going to do it Monday. We're also going to give you trade idea updates and everything on Monday. It's a good day to do that. We're going to recap January as well. Really a strong month for the trade ideas. And we're going to go over all that on Monday. It's going to be an evaluation time, a great time to be doing that. No donation Friday. 50% of your profits go in your pocket. A losing week. If it's small, traded as usual. That's the situation I'm in. I'm trading as usual today. I was down a little bit. I wasn't real happy about how Fed Day turned out. It's a new rule for me. I'm not trading Fed Day anymore. I might take significant losses on Fed Day. I'm not doing it anymore. If it's big, if you're way in the hole this week, if Fed Day and FOMC cleans you out on Wednesday, wait till Monday to trade. There's no reason to get in here and to try to battle through some serious adversity. Odds are if you took a financial beating this week, you need a break. You want to be in this for the long haul. You don't want to get just banged out in 48 hours and lose all your money. You don't want that. Neutral, usual trading. If you're at scratch, if you're near even, just trade as usual if you'd like. You can cut your leverage down because things are kind of in a mixed bag, or don't trade at all. The idea is to get it in when you have the best of it and protect it when you don't. And that really figures into our psychology here as an active trader that wants to do this as a career and a profession. You got to be here. If you're not in the markets, you can't make any money. And if you lose all your money, you can't trade. So you got to preserve your capital. Most of what happens to traders is they get tired and worn down and they start doing stupid things that are outside of their character. Over trading, revenge trading, things like that. Let me see. Fit Life. Good afternoon, Shane. Are you trading real money today? Yeah, Fit. I put. We're going to trade demo here. We're going to trade demo here on our on our scalping. We're going to do demo with the 9 EMA. I took one trade earlier today, and we just went over that on WTI crude. So I'm up about, it was a 3-lot, 26 buy, and I got out at 31. So I'm up about $150. I want one more trade. I want to walk away. My daily target's typically $350. I want to hit that. I want to rack them and come back next week because this week hasn't been good. I mean, I just never really got out of the starting blocks, and Fed Day was a reason why. Could have done things a lot better this week, Fit. But still fight. Next week's going to be an amazing week. It really will be. Be sure to join us here. In any case, we're scalping today. Scalping 101. Why scalp? Reduce systemic risk, minimum capital outlay. You can statistically quantify your results. We're going to go over that Monday, and then action-packed. I'm going to show you some real-world statistically quantified results from my last trading week. We're going to do that Monday. I just didn't have a chance to prepare it for today. I would have liked to have had those numbers, but it's just too dang hard to try to get everything together, trade, and build the content we need to build. Scalping 101. What does it mean? What you need to succeed is what it means. You have to have these things. If you don't have these things, then forget it. You will never beat the numbers. You will never beat your broker. You will never beat the market. You need low latency market access. You need to be able to get in and get out. You need minimal slippage. You need good markets, deep markets. What I mean by deep is you got to have people in the market. If you don't, you're going to have those big spreads, and those are going to absolutely kill you, especially if you're using, scalping Forex. Low commissions. If you're in futures, if you're in stocks, or even in Forex, some Forex brokers do a flat commission. You've got to have your commissions as low as they possibly can be. You've got to have them low. And then right here, consistent volatility. You need something that moves. If the market's not moving, you're going to get chopped to death scalping. It can be an absolute miserable experience. That's why most scalpers, I would say 50, 60, 70% of scalpers, most people start out as scalpers because it's low risk, perceived low risk. Most scalpers that stick with trading eventually turn into swing traders. They really do. I still like to scalp. You can get in there and scalp, but I also like position trading as well, daily position trading, and also the trade ideas that we put out. Those are pretty tough to beat. In any case, what's our weapon of choice today? We're going to do the 9 EMA trading strategy. Learn the 9 in under 10 minutes. That was one of our most popular videos on how to trade YouTube. How to trade Calm YouTube. Check it out if you haven't seen it, and we're going to use RSI confirmation today. So as we just went over, RSI is a confirming tool. When it's overbought territory, the reading is over 70. When we're in oversold territory, the reading is under 30. When we're overbought, we look to sell. When we're oversold, we look to buy. It's that simple. So what's our key to success here? Well, we use the 9 EMA to get us into the market. That's our trigger. So if we're out here hunting for trades, the 9 EMA is our trigger. As soon as we're on, say, a sell right now, the market is overbought territory, we want to sell, I need a negative candle close beneath my 9 EMA, and then I pull the trigger and build the trade accordingly. And we're going to build a few of these right now. So let's go ahead and take a look at what we've got here. 5-minute chart, gold. We're on a sell. We want to see a bar really retrace, close beneath the 9 EMA. Then we're going to take a shot. Stop loss is going to go above that swing high. Profit target is going to be either a product of market structure or we're going to assign a static risk versus reward. Right now, I'm watching gold closely. I think gold could give us a pretty good counter trend sell, scalp here in the next, I would say, hour, if it even takes that long. So I'm watching that closely as the day develops. Dollar CAD, this is one that we absolutely have to respect. We have to respect right now. The tariff news has blown the dollar CAD out of the water. If you want to go back to a 30-minute chart, I'll show you exactly when the tariff news came, and there it is. That's no joke. I mean, you rallied about 0.5% on that. You had a huge tail out there. Really, just a huge, absolutely huge upper shadow in that candle, all the way up to about 146. So I would be looking, I mean, ideally, you'd love to sell at 146. You would love it. That clearly there's sellers there. They dug in right in front of a key number, and they sent the market back down. So right now, if we want to trade this, clearly we're sort of in no man's land. We've been trading inside of this crazy candle, the tariff announcement. We've been trading inside of it for, 18 hours, something like that. 1:30 yesterday. So let's go 8, 11. Yeah, about 18, 19 hours, whatever. So we've been in here, traded absolutely sideways. So if we're trying to gauge a market direction, theoretically, you could still be on a sell if you were using a 30-minute chart. You can see right there you were in overbought territory. Where would your sell have been? It would have been somewhere right in here. Right in here would have been your sell. Bang. You could have got a nice little move. Your stop loss, though, probably if you took that sell on this time frame, would have had to be up there above 146. And if that was the case, you're probably looking for a much bigger move than just that one. So right now, we're looking for a shorter time frame play. We want to get in on some smaller price action, maybe a smaller move, and see if we can make a little bit of money. Well, we had a real nice move right here. That's a solid move. That's not bad. Started at right around that core PCE number, 6:30 a.m. my time, 8:30 a.m. Eastern. Compression break. There's your break, and now you're coming back down. We went into overbought territory, so we were on a sell. Where would our sell have been? Right here. Couple options on the sell. We're going to make a video on the 9 EMA. I'm going to use Fibonacci retracements to show you how to improve your entry points, because a lot of times this really is like clockwork. You see a bar close, there's our trigger, there's our sell, right? Especially on these short time frames, inevitably, the market rotates back against you, and you go back up at least to your 9 EMA. So the idea could be as simple as this. You could sell on something like this. You could sell right there on that bar close, looking to get in on a big runner. You could wait for price to retrace to the 9 EMA and sell there, or you could use something like a Fibonacci retracement tool. That's probably what the video is going to be based on. As a matter of fact, I almost guarantee that's how I like to do it. In any case, that could be your sell. So right now, I mean, theoretically, we could sell the market. So let's go ahead. Let's get out our paper trading account, and let's give this thing a go. Let's go ahead. Let's go to trade. Let's go market order. I want to sell market. All right, sell it. Okay, we're officially short. We're officially short the dollar CAD. Now, remember, a trade is 3 parts. You've got your entry point. All right, we went over the setup, okay? Overbought territory. We're on a sell. Bar close beneath what we're looking at on the 9 EMA. That's our trigger. That's our setup. That's how we know we have an opportunity. Now we build the trade. The most important thing that you've got to do if you're going to use moving averages, and listen, unless you're scalping them like I did earlier today, where you're just looking for immediate positive price action within a minute or so, you've got to really focus on catching moves. That means you have to be trading when the markets are probably at their most active. You need to understand trends. You also need to understand your tools, your confirmation tools, and what it's going to take for you to succeed. But the biggest part of all of it is going to be building your risk versus reward. Now, here's how I like to do it. I like to be very, very selective about these trades. There's got to be enough money at play. I like to put my initial stop loss above the most prevalent swing high or swing low. In this case, that would be the top of that trend right there. Now, what could we do? We could also have played it real tight, and this is a scalping seminar. Right there probably would have been your better stop loss. Scalping's all about getting in and out of the market a lot, and it's about doing it efficiently and cutting off your losses when you know you're wrong. Right there, if your stop loss is up at 105, 105.40, remember, if you're going to use swing highs, swing lows, our market structure, always put your stop loss a few pips above a swing high and a few pips below a swing low, just because a lot of times you'll see the stops get hunted. You'll see the big liquidity sweep come in and help you. You got to be very careful with that. So right there, that's probably what I would be looking to do, maybe 41, something like that. So if I was interested in catching this move, what would I need to get out of this trade? Our entry point's actually fairly close to what it would have been right here on that close. So we sold 145.13s. Okay, if we sold 145.13s and I've got a 145.41, what do I need to at least get? In my book, you've got to at least get a 1-to-1. So that would be a 28 pip move. So in this instance, you're going to be looking for something probably right down in here. So 145.13, 28 pips, 13 and 15 would be about 85, somewhere in there. So if you're looking at about 85-ish, that would be your profit target. Now, is this a good trade? Is there enough room in there to give us what we need to succeed here? Yeah, it's not a bad trade. It's not the best one ever. What else could you do with your profit target? Getting in on big trends is really the key to winning with this type of strategy, getting in on moves. Do I think we have a move in here today? Possibly. Possibly. You could also shoot for market structure. Maybe something down in there. Maybe down near this swing low. How about this? How about maybe going down here to your overnight low, somewhere in there? Crazy candle. That's why we're even looking at the dollar CAD to do this. It's because we have action in there, plenty of action. Okay, right there you can see your 9 EMA. If you were trading it during the overnight, looking for a rebound, there it was. Oversold, bang. You're looking to buy. You're still in the market. Okay, that's great. What could you shoot for here? You could shoot for this area right there, that order block. If, in fact, you wanted to do it, that could be one potential profit target, and the other one could be this one. If, in fact, you're shooting for this one down here, 144.34, it means that you're taking a position probably for what, 80 ticks, something like that, 90 ticks? Is that worth it? It's about, what, a 3-to-1 payoff? That's a position trade. Is it a bad one? I wouldn't really call it a bad one. I would say that we have the technical setup. We have enough volatility, and this trade has that kind of potential. Do I believe it's a guaranteed winner? Of course not. There's nothing guaranteed in this world. All we did was we positioned ourselves according to our technicals. Now, if we wanted to scalp, now that's a position trade. If we were serious about, okay, let's really scalp this thing, we could bring our stop loss right down above that swing high. High right there is what, 28? What's our entry, 13? So we could be looking for 15, something like this. You can do that too. It's all about what you want to do. For me, I'm going to let this thing roll a little bit. Let's see what happens. I think that's a pretty darn good stop loss, 41. That's going to give you plenty of room to work, 28 ticks. If you pulled 28 ticks off this trade, it would be pretty good. Do I believe it's a slam dunk? No, I don't. Not with the tariff news. And right now we're all watching WTI crude. We just went over my breakdown on crude, but 72.22 right now, WTI. So that 72 area did hold. That's going to theoretically help this trade. If crude oil trades up from here, you're probably going to see some downward pressure on this pair. But right now, we are just absolutely log jammed around that 9 EMA. Let's wait and see how this one unfolds here for a few minutes. Okay, now sort of what we focus on this product a lot. And this is the US 100. And the reason why I do this is because you have an opportunity to trade something like this on a 1-minute chart. And the reason why you can do it is because right now it's one of, by far, the NASDAQ. I mean, if you wanted to look at E-mini NASDAQ futures, which is one of those that I trade, and it's sort of the basis. The NASDAQ's the basis for the US 100. But this one right here, you're going to have to excuse this platform, this trading panel. It closes down. For some reason, I don't know why. I really don't, but it'll just close out of the blue. In any case, you'll see that there's just legitimate volatility here on the NASDAQ. I mean, right now that's actually pretty quiet. But what we're seeing is we're seeing some good bullish price action. So on a 1-minute chart, you're sort of oversold or you're overbought right back there at about 8:03. We were on right at the beginning of our stream. So if you were overbought there, that probably would have been your sell right there. Now, what would have happened if you were scalping? You'd have got chopped out. No question about it. That would have been your stop loss. That was your entry. Bang, you got chopped out. Okay, that's fine and dandy. What can we do right now to place a trade? Not much on the 1-minute time frame. You've got to really be looking for this thing to get overbought or oversold, and you see on the 1 minute it didn't. Now, on some of our 10-minute trading strategy blitzes, just to get some action, we've gone as low as a 15-second chart. Do I recommend trading a 15-second chart? No. You'll pull your hair out. You'll lose. If you're trading leverage, heavy leverage on a 15-second chart, that is the toughest way to make a living that I could ever imagine. You're going to win a lot of trades. You're going to lose a lot of trades. You're going to take a lot of trades. And the person that's going to make the most money trading this short of time frame is going to be your broker. Your broker is going to be taking commissions. Remember, if you're trading futures, every time you pretty much push the button per contract, The trade I took earlier, 3 contracts at WTI, that cost me just about $15 to execute, and that's just clicking the mouse button. That's $15. So you got to really think about, okay, how much do I really want to trade? What do I need to get on these plays, and what's my goal? So right here, 15-second chart, you can see we've absolutely flatlined. We've absolutely flatlined. We're in the dead center of that RSI. It doesn't usually stay there very long, but you can see there's no trades right there. Let's back off. Let's try an E-mini Dow. How about the E-mini Dow? Okay, the E-mini Dow on a 15-second chart. Problematic in so many different ways, but right there, you'd have been an over, let's see right there, oversold territory. We would have looking to buy. Where would your buy have been? Right there. So that would have been your bid. This trade's ticked higher for you. Where are we at right now? We're getting towards the top of our RSI, so right up in here. As soon as we break over 70, we're looking for a sell. So 15-second chart, we're getting there. We're getting there. We need probably another leg higher. Probably have to trade somewhere up around 45.90, something like that, and then we can look to sell the market. The way that I would do it is probably just place a market order. You don't have to do this, but sort of in the interest of this stream, we'll place a market order sell, and that'll get us short immediately. Is that the best way to do it, though? No, I don't think so. I think what I would be looking to do here is definitely, if we wanted to sell, we would wait for this market really to penetrate that 9 EMA, maybe get a little bit of a move, and then build up maybe a Fibonacci or something. And if the Fibonacci levels line up with that 9 EMA, that's where I would probably be looking to do the short. And once again, I have to build that video out. We're in an interesting period here at How to Trade, just sort of the lone gunman right now in the saddle, and so we're going in a million different directions. But that's a video I really want to make because it can help you build. It can help you build your entries into something really powerful. Think about what you're doing with this, just this simple little strategy. You've got an idea what the market's doing. It's either overbought or oversold. The RSI tells you that. You've got a finite way into the market. We're not just buying or selling anything willy-nilly. We get an actual trigger, a finite trigger that gets us in. What's and we can build, we build our stop loss and our profit target the way that I just showed you, but can we make it better? You can always make things better. What about this right here? This would have been our buy signal. This would have been our buy signal right there. Look at this. Pulled right back down. You've got a great opportunity there to improve your entry point. So there's a lot going on here. There really is. Once again, we're doing this for instructive purposes. 15-second chart. You may be able to trade it profitably. If you're going to do that, I would focus on probably not going more than 1 hour a day or so. This thing will tire you out. This trading 15-second and watching your account go up and down all day, making all these trades, you will be tuckered out. Some of those trading days when you're up around 20, 25 trades. I went through one of those not too long ago. I was exhausted by the end of it. Absolutely just difficult. In any case, right there, you can see there's your break. So I don't think we're going to get a sell here. Let's go to E-mini. Back to our NASDAQ. NASDAQ not really doing anything either. Let's go to E-mini S&P 500, and you can see we're just not getting any love at all from really much of anything. Let's take a look at our dollar CAD trade. Dollar CAD trade's looking pretty good. I think that we're onto something here. So the real question is what do we want to do with our money? You can see we're up about 14, 15 pips. The going looks like it's just getting good. The question now becomes your trade management. What do you want to do? How do you want to manage these things? Now, the number one rule of all of trading is never make a winner a loser. That's the first rule I was taught. And I was basically, it broke down to me like this. If you get into one of these trades and it goes in your favor and you've got a stack of money, take the money. And if you don't take the money, what do? Make sure you don't lose. Something like that with your stop loss. Move your stop loss to break even. I don't particularly care for that. I'm not a big break-even trader. I don't like breaking even. I like the market either to break in my direction or go take me out so we can go do something else. But if you move to break even here, the problem with that strategy becomes we took the initial risk. So on the trades that don't go in our favor enough and rotate against us, we're going to take all of those losses. And let's say we're trading something that we're looking maybe just for a conservative profit target, and we move to break even. It's a guaranteed loser because we're going to lose all the trades that we lose, and we're going to get stopped out on a significant portion of the ones that actually go down and get their points. That's one reason why I focus on one-to-one risk versus reward ratios. I don't move it. Unless it's a heavy leverage trade. And if I initially get my 5 ticks or 10 ticks right away like that and I don't take any pain, I'll consider taking that. But if I go through a little bit of pain or the market's indecisive, we have to stick in there and get paid. If we don't get paid, we're not going to make any money in the long run. So on this trade, if we were looking for a basic 1-to-1, 28 was my risk, so I'm looking for what, 15? If we're playing this real tight, 15, I should already be out. I should have been out at 98. So that one hit. Now if I'm looking for a 1-to-2 or a 1-to-3 or 1-to-4, like a lot of traders will, maybe shooting for this, then this isn't necessarily a problem moving to break even, because the idea is, okay, now we're insulated and we have a risk-free trade and we're just trying to catch a runner. And then your profitability is going to depend on how many runners you catch. It's not really my personality, but it could be yours. And a lot of traders make a lot of money getting into the market at the right time and getting in on a runner. Yesterday, the gold market, there was a fantastic retracement zone that I bought, and I took X amount out of the trade, but we ended up trading, just breaking all-time highs late in the day and then trending higher. So potentially could have been a monster trade. But you know what? Stick with your plan. Build a plan and stick with it. All right. Well, there you go. Manual, I entered 0.05 on the dollar CAD. Well, you should have made some money then. You should have made some money. This one's coming off. All right, everybody, that's a pretty good look at the 9 EMA scalping. I'm going to go ahead and bank these profits, and we're going to walk away a winner. How's that? So we're going to have a profitable trading day on the dollar CAD. That was a lot of fun. I like those active pairs when they're active during this period, at this time period, and also the news cycle. We knew there was a chance to really target this dollar CAD because there was volatility there. The first thing you need if you're going to do this, you got to pick a market that's volatile. You got to be able to do something with something that's going to work with you. If you try this stuff in flat markets, you're going to get in trouble. You're going to get in trouble. Now, the beauty of it is short time frames on flat markets, you're not going to lose very much on a trade because the risks aren't that big, but you're going to lose over and over and over again. And that's the real challenge you have in flat markets. Number one thing that all of us need to do to be successful traders is we need to be able to read market state. And I've shown you my daily absolutes right here, written down right in front of me. Daily game plan. There it is. I look at it every morning. Identify market state. Number one, are we trending or are we flat? That's the big one. If you can understand when a market's trending and when it's flat, and you can do it quickly, you can sway the market. You can sway the trades in your favor. I'll show you one thing on gold here, and then we're going to go ahead and sign off. And I'm getting more and more into sort of revealing what I like to do in the markets because I think it's important to be as transparent as you possibly can be. We try to do that here. I try to do that here. I tell you when I lose. We're going to go over that on Monday. I'm going to show you this last week and how challenging it was. This was the trade from yesterday. This was a GC. This is gold futures. All right, this is April gold futures. And this was a trade I took, and I took major heat. Right there from this spike low, right here from this spike low to this high, I knew we had a pretty darn good area. I knew we had a pretty darn good area right there. This area right here wasn't bad either. Let's see that low right there, low. Okay, so it would have been this spike low, which is about 8:30 my time. Or excuse me, 8:30 Eastern, 6:30 my time. Pretty much the heart of when gold is active. I watched this spike high set up. We had all-time highs. We made new all-time highs here, and then we pulled back. Right there is where I bought. Right there. I bought above the 38% retracement. I believe I bought 2840s, 2840.9s. And I had 3 contracts on it, which was about $30 a tick, and I went for a ride. I went for a ride before this thing sort of evened itself out, but you can see that hammer formation set up. So we took a draw, and our draw down there was down to about 40.2, or excuse me, this low right here was 37.7. Not a very big draw in the scheme of things. About what, I took a $3 draw there. Not very much, 30 ticks, but $30 a tick. That was about a $1,000 draw. And then what happened? We were right. Hammer set up, bang. We really moved higher, and I got out right in here. Now, it was a good trade. It was a really good trade. But, take a look at the money I left on the table. Right there would have been the end of the futures trading day. So he could have exited maybe at 28.50-ish, which was one of my top side targets. Instead, I got out at about, 28.43, 44, somewhere in there. So left. You left just a staggering, probably a couple grand on the table there. But it was outside of the plan, and you got to stick to your plan. It's very important to stick to your plan. If you want to be a position trader, you can do it. You can be it, but you've got to have the account to do it. You've got to have enough money to ride out the losses, and you also have to have the mentality to stay in the market no matter what. For a lot of us, we get out in front, we get a winning trade, and the temptation to exit that winning trade is far greater than exiting a losing trade. Our human psychology has us backwards. It's got us backwards. Once we take a little bit of a draw, we really don't have a problem taking more of a draw. And the reason why is to cut the trade off is to admit it's a loser, and it's to take that financial loss, which causes a lot of us physical pain. Now, in this instance, I let it run because, well, I had a pretty good idea that we were trending higher, and I wanted the trade to play out. So my exit, my initial stop loss was going to be beneath 50%. Was that too big of a risk? Potentially. It was stretching it for what I like to do. But did it pay off? Yes. Can you hit that trade 9 times out of 10? No. Eventually, when you take a big draw, the market keeps going against you, and you're just wrong. That's what we try to avoid, is financial catastrophe. And if you trade, according to maybe that 9 EMA with RSI, you're probably going to stay out of trouble. All right, everybody, I'm going to go ahead and sign off here. Absolutely, Emmanuel. Good to see you. Marco Vargas, good morning. Happy Friday. Much love from California. Thank you, Marco. Best wishes, thoughts, and prayers go out to everybody impacted by the fires in California. I know it's been a challenging open to 2025. So we're off on the right foot. We're going to recap everything. And that's a wrap. Are we still going to scalp gold? We're going to sign off right now, Emmanuel. I showed you the setup, though, and what to look for maybe later today. A gold sell might not be a bad thing to do, but on Fridays, gold has a way of trending higher a lot of times. I'm very, very, very conservative right now going into the weekend. I want to get back next week and do some work. Be sure to check out our stream schedule. That's going to be loaded up here in the next hour or so, and potentially we may have a trade idea, or we may not today. We may wait for next week, but we'll be up and rolling. All right, everybody. Thanks for everything. Ivy, good to see you. Bobby Bob, always a pleasure. And Bren, you're absolutely welcome. Emmanuel, you're welcome as well. That's a wrap, guys. Have a fantastic session. Trade the action well, and we'll see you Monday.